Do you have regular launches in your business? Do you have retreats and live events that go along with your mastermind or group program? This video is for you. If you've read Profit First and wondered what the heck is the difference between materials, true revenue, total revenue, and how materials and contractor costs fit in, this video is for you. Hi, my name is Amber Duggar, founder of Profit for Keeps, and in today's Profit for Joy TV episode, we are talking all about true revenue, total revenue, materials, contractor costs, and what you really need to know to determine if you need to be concerned with it. So let me start off by just saying what the difference is between true revenue and total revenue. So if you've read the book and you've heard these terms but are a little bit unsure of what it really means, when you think about money coming into your business, all the money that comes in without any fees taken out, that is total revenue. Now, if you're a service-based business, your total revenue very well also may be your true revenue. So what's true revenue? True revenue is, the reason that it's coined true is because this is truly what you have after you have paid out any contractors that are directly tied to bringing money into your business, or if you have a product-based business and you're paying for product to then sell, it's the amount of money that's left over after you subtract out the cost of goods, after you subtract out the cost that it's going to take to have the item to be able to sell it to someone. And the reason it's called true revenue is you could have a multi-million-dollar business, but after you account for these costs that are associated with bringing that money in, you could very well only have like $200,000. So your actual business is $200,000. Your total revenue may be in the millions, but if your actual 200 is what you have available to pay yourself, be profitable, have money for taxes, and pay your overhead or your other business expenses, it's important to maintain that perspective, because it's really easy to go into business thinking, oh my gosh, I'm making millions, I can spend like I'm making millions. But if you recognize that your true revenue is like 200,000 instead of those millions, then it helps you keep things in perspective in terms of what you can truly afford in your business. So how does this relate to online business? Well, the main things that I see when someone is implementing Profit First in an online business is if you are over $25,000 a month in revenue, Stripe fees can be considered a material expense. The way that you want to determine what a material expense is ask yourself, would I be incurring this expense directly tied to the amount coming in? So Stripe fees are a very good example. If you charge $10,000, you are immediately going to incur an expense for charging that $10,000. Now, if you have a VA who is paid every month regardless of the amount of money you have coming in, that would be considered a regular business expense. So I hope you can start to see the difference here. Another example is between a contractor like a VA who's every single month regardless of how much money you have coming in, versus let's say an associate coach that's coaching some of your clients in your group program. If that associate coach is coaching people based on the amount of people that have come into a group program or the amount of coaches you want available for a group program, they would be considered a materials cost, and that would be the amount that you take out before you run that revenue through your revenue calculator. So let's take a step back for a moment and let's look at what true revenue and total revenue, how it all ties into the whole scheme of things with money coming in. So when you have total revenue minus materials, contractors, Stripe fees, all of those things, whatever's left over is true revenue. So what we're really looking at here is how to define what those materials costs are and how it can really help you. So if you have a business, for example, that is running primarily on Facebook ad lead generation. So let's say that you have one main product and that one main product is being purchased by leads that are being brought in from Facebook ads. Well, those Facebook ads could very well be materials costs, because if you know that you're bringing in leads at a certain amount of money and then they are purchasing, let's say your low ticket offer, for example, and it's paying for that particular Facebook ad that you're currently calculating per person. This will now be considered a materials expense. Now, you want to have that be a materials expense because, as you can see, when you start to increase more money into the Facebook ads, theoretically, you'll be getting more leads and you'll then be getting more purchases. So that is directly tied to the amount of money you're putting into the ad, and that's why it wants to be a materials expense. Now, if you have a separate budget for Facebook ads of just retargeting, getting in front of people, doing more like know, like, trust ad funnels and things like that, that can be considered a business expense because you could have a certain amount per month that you're doing that, but it's not tied to bringing in a certain amount of leads. It's instead nurturing the current community that you have. So that's a difference there. Another thing to think about is if you are running a group program that has a retreat or a live event attached to it, you want to be thinking about how you can protect yourself from not having that money later to be able to have that money for the live event or for the retreat. So you can think of the retreat or the live event as a materials cost and work that into your package pricing. So you could have the package price, let's say, be $10,000, and you put aside $1,000 of that $10,000 for the retreat or the live event. You then would have true revenue of $9,000. It would be the $10,000 total revenue minus $1,000, which would be the materials expense in this case. The $9,000 remaining is what you would put towards your revenue goal and what you would also put towards your profit, owner's pay, taxes, and business expenses. So here's the main takeaway I want you to have from this video. I want you to remember that when you're calculating a revenue goal, it is after materials. Your revenue goal, the one that I've been talking about many, many weeks now, is based on the true revenue of your business. So if you have Facebook ads that do lead generation, if you have live events and retreats and things like that that you're including in your pricing, you want to make sure to remove those before having that go towards your revenue goal. I hope you liked this video. I'd love to hear what your biggest takeaway or aha was. If you have any questions about this, we'd love to make future videos that really help address what your questions are. So if you ever have any feedback or questions, please put them in the comments so that we can add that to our list. I want to thank you so much for being here. If you're new, please consider subscribing and liking the video. It helps so much in terms of getting our video in front of others that really could be helped by this content. I want to thank you again for just your love, your support, your beautiful comments, all the feedback. It's just so incredibly nice and generous, and I really appreciate you taking the time to comment on the video. I hope that if you haven't already, that you jump over to amberdugger.com/community so that you can join an amazing group of online business owners and service-based business owners, authors, speakers, you name it. There's some really incredible people in there, and we are all looking to achieve profitable, sustainable businesses that really allow us to have enough money for the things that really matter to us. Remember, money is simply a resource, and making peace with money allows you to pursue the things you enjoy with freedom. Until next time, much love to you.